Glenn asks if quote unquote expected inflation is a major driver for eventual inflation. How can anyone predict future inflation?
Well, this is an absolutely fascinating question, and it's one of the things that was learned in the 1970s, which is that if you are managing inflation, as much as managing the current inflation rate matters, what matters in a sense even more is managing what actors, economists call them actors, in other words, businesses, trade unions, people who make decisions in the economy, what they expect the future to be. Because depending on that, they will raise their prices, attempt to raise their wages or not.
Right.
And because if you anticipate inflation and you fail to raise your wage, then you're basically writing a big L on your forehead and saying I'm going to be a loser. And no one wants to be that, right? So once this mentality gets ingrained in society, then the price wage mechanism acquires this momentum which is hard to stop, and you have to inflict very heavy punishment on all of the players of this game to stop them from continuously playing this forward moving move. So when central bankers say they're in the business of controlling inflation, it's literally true that the most important thing they're in the business of is controlling inflationary expectations. Now, you might say that sounds crazy. That's like saying, my main job is to control people's dreams or something, right? Their hopes and dreams. That's my job. I'm going to control their hopes and dreams. How do you do that?
In politicians.
Yeah, exactly. But so what is it that they monitor? Well, where in the markets, if you're thinking about longer term investments, if you just even in your own personal portfolio, if you're lucky enough to have one, every single move that you make is conditioned on certain forward forecasts of the future, right? You wouldn't right now, I don't know, invest in steamrollers or internal combustion engine cars, frankly, because we know they have a limited time horizon. Now, you might be a Tesla bull or a non-Tesla bull, but clearly, longer term, EV has more future than internal combustion engines. But you might think that in the short run, there might be some big run on BMW making fast cars. Right. Now, every single one of those bets, one way or the other, is a bet on the future. And in the same way, if you look at financial markets, and in particular bond markets, which are just IOUs, they reflect the collective wisdom of the market or unwisdom of the market in its thinking about what inflation is going to be 2 years, 3 years, 4 years. Literally, you can take a imprint. It's like a kind of reverse print. If you look at the price of bonds from here to 13 years from now, it's telling you what highly incentivized people who manage trillions of dollars think inflation is going to be for the next 30 years. And that's what central banks constantly monitor and try to manipulate. And they get really worried when they see that shifting. And one of the reasons why I think, this is a keep calm and carry on kind of a moment is that we haven't seen a panic in the bond markets. If people in the bond markets thought there was a real risk of us returning to the 1970s, bonds would be priced very differently from the way they are right now. There was a tremor, and we're talking huge amounts of money, $20 trillion for the American Treasury market. So big money. And when that, even a small tremor in that kind of market, everyone has to take extremely seriously. But what we haven't seen is the sort of tremor which suggests reset, okay, the future is 5 to 10% inflation for the next 10 years. It's just not there.